Hello everyone, I am Rishabh Shah, and in this video I would like to explain what you as an investor should look at to identify multi-bagger stocks. We have created a group of 5 potential multi-bagger stocks to have in your portfolio. MAS Financial, Mishra Dhatu Nigam, Ultra Marine and Pigments, Deepak Nitrite and IndiaMart Intermesh. This list of stocks is for a long-term horizon, keeping several fundamental factors in mind. As an investor, this will guide you to make your own checklist and research these stocks better. So now firstly, let's look at what are multi-bagger stocks. These are stocks which multiply or provide avenues for phenomenal wealth creation. A stock that doubles its price is called a 2-bagger, while if the price grows 10 times, it would be called a 10-bagger. Thus, multi-baggers are stocks whose price have risen multiple times their initial investment values. These are essentially stocks that are undervalued and have strong fundamentals, thus presenting themselves as a great investment option. The wealth creation could happen over a long period of time through gradual compounding and in turn makes it necessary to have a patient mindset. However, serious investing happens only when the investor has understood a company's business model, its risks to growth, market potential, and has invested at sane entry valuations, who is willing to wait for a business to grow its earnings in the future years. But the catch is, a multi-bagger is a multi-bagger only in hindsight. At first, it may look like a risky undertaking. Now, let's look at what are the key features of a multi-bagger stock. The size of a company has a great deal to do with what you can expect to get out of the stock. How big is the company in which you have taken interest? Specific products aside, big companies don't have big stock moves as they are already quite stable. In certain markets, they perform well, but you can expect the biggest moves in smaller companies who are growing at a faster pace than their larger counterparts. For example, you don't buy a stock in a giant such as MRF to triple your money in 2 years. For a TCS to double or triple its size is a mammoth task in the foreseeable future. We have carefully chosen stocks in our model portfolio which have a market capitalization in the range of Rs 600 crore to Rs 8,000 crore, which are not very big in size and have the potential to multiply at a higher rate. Healthy earnings growth. A shareholder earns when the company makes profit. When you look at the earnings of a multi-bagger stock, you will typically find high growth in the earnings of the company due to its revenue growth model, profitability model, and also capital allocation model. Taking an example of MAS Financial in our model portfolio, it has grown its earnings at a rate of 35% over the past 5 years and 45% over past 25 years, which is not only very high but also very consistent, showing the superiority of the company. Another simple answer to the question how to identify multi-bagger stocks is to look for businesses that have high margins. Usually, multi-baggers command high margins either due to lack of competition or some operational efficiency or because they command a leading position in the industry. Moreover, these stocks tend to have sustained margin over time that doesn't fluctuate every quarter or year. IndiaMart, being a technology-based stock, enjoys a very high operating margin which has been improving rapidly over the past quarters. Future growth potential. A company may not be able to make money if it doesn't have a comprehensive range of products or services, as the markets are very dynamic in the current scenario. One of the characteristics of a multi-bagger stock is that the management is very vocal about its vision and is able to explain the steps being taken to achieve the same. Looking at Mishra Dhatu Nigam, that is Midhani, in our model portfolio, the company manufactures a variety of super alloys, special steels, and materials for defense and other strategic sectors like aeronautical and space applications. It has the technological ability to manufacture a wide range of advanced metals and alloys under one roof. Midhani is trying to venture into newer categories and subsegments that are synergic with its institutional capabilities. Also, it is trying to enter new sectors such as oil and gas, mining, power, railways, chemicals and fertilizers to create new levers of growth. Most important feature of a sustainable multi-bagger stock has been the ability to generate free cash flows consistently and the ability to grow them. Multi-bagger companies usually use their internal funds to expand or launch new products. These companies also tend to have a lower debt level against equity. Looking at Deepak Nitrite, the company has generated free cash flows consistently and maintains a comfortable debt to equity of 0.7. To conclude, multi-baggers are a great option for traders and investors to invest their money. However, before investing, you should gain adequate background knowledge about the companies offering multi-bagger stock, since they can be risky bets and will vary from situation to situation. Sustaining these challenging COVID times can be a good litmus test for high-risk bets, and if they survive, returns could grow multifold. Above all, you should be capable enough to identify the appropriate multi-bagger stock where you can invest at appropriate valuations. Also, don't invest with an expectation that multi-bagger stock will generate unrealistic returns in a short span of time. Patience would be key. While investing in these stocks, it would be prudent to allocate a portion of your capital to these risky bets and the rest to stable large cap stocks in order to diversify your risk. Thank you.